SaaS and the SaaS model is getting a little bit exhausted. And what people are looking for is a lot more, how quickly can I get to value and return? And I want to pay only for what I used and show me that it actually had a material impact, because I think the stat is 40%. It's probably higher. 40% of all SaaS licenses go unused. Well, that tells me that the value is not being delivered in the aggregate.
Welcome to the Emblazers Show, where B2B leaders are igniting revenue. I'm your host, Abby Kerr. And on today's episode, my colleague Tim Riesterer is joined by his longtime friend, Ken Powell. Ken's perspective on growth is simple. Organizations rarely fail dramatically. Growth usually stops compounding in patterns that often go unnoticed. Ken is the Chief Revenue Officer at K1X, an AI-native platform modernizing tax data operations for the alternative investment industry, and an operating executive with more than 25 years of experience scaling AI, SaaS, and tech-enabled companies. An operator thinking in public, Ken shares real lessons from the arena to help others see problems earlier and act faster. Let's check out the episode right now.
I'm joined today by a CRO, but also a dear friend. And so things may happen during this podcast where we get familiar and you'll all be like, why am I watching this? But Ken Powell, it's great to have you here. I've watched your career over the years ascend to the CRO chair and then move into an operating partner role where you were the CRO to the CROs or CRO Sherpa or whatever that is, and then go back into a CRO chair. And here at the Emblazers Show, we love to hear the perspective of the one who's sitting in the chair, the hot seat. And we've had you on in conferences, and you've always brought amazing wisdom. So welcome to the Emblazers Show. I'm so happy to have you here.
Thanks so much for having me. It's a privilege. It's always awesome to get to talk to you about all things personally and professionally. And I know we're going to talk a lot about growth, one of my favorite topics today, one of your favorite topics. You just made me think about something. Am I a chief recurring officer? Am I
CRRO? That's the recurring revenue. Well, that's also a thing too. So sorry, there's going to be many entendres here today. This is what I love about it, because you've been on both sides of the sort of the fence, if you will, like one where you're advising and counseling and the other where you're holding it. And people are giving you that kind of input. Is there a side of the fence you prefer, or is there good and bad qualities to both?
I guess it depends on how the quarter went. Sometimes to your point, I've had the chance to kind of be in the operating position or the operating role. I've been in the governance role, and I've been in, I guess I'll call it the instructional role. So whether you're kind of leading teams or leading a strategy, you're advising from a board seat or from an operating partner seat, or you're in forums like this speaking and trying to get good ideas out there for the rest of the world to maybe grab one or two things. And I've been looking at it from a number of different lenses over a number of different years.
And a number of different companies. That's the best part too. It's just not a myopic point of view here. You've seen this, you've tried things, you've vetted things, move things in, move things out. And so today, hopefully, we'll be able to tap into some of that for our revenue leader audience. So Ken, you mentioned it. We're here to talk about growth. I said recently that we are in an unprecedentedly unpredictable time. So shorthand, sort of chaotic. And yet, as unpredictable as things are, everything the board's asking for and CEOs are asking for is predictability. And so growth is a bit of a struggle. It's a struggle to do predictable growth, scale that growth. These are things you've studied. So I'd love to hear some of your opinions of current state and things you're seeing, and then we'll dive into those.
Yeah, we're in this like massive reset, right? And the way I think about it right now is that there's a different set of questions that boards and management teams are asking each other, and it's under the lens of business durability and product durability, meaning that what got us here isn't going to get us there, but we have to look at the landscape of the world slightly different, ask a slightly different set of questions. But here's an interesting thing you said just a moment ago, that I've seen things from a number of different lenses. I agree with you. It's just kind of like the range of experience has allowed me to have a point of view as to growth and how to stimulate that over time. But there's a single thread that happens across all of those organizations. It's the following: that growth almost always doesn't break at once. It starts slowly compounding either up or down in a way that sometimes happens before the numbers show up. I've heard this in a bunch of cases. When you look at the city of Detroit, it's a perfect example of how growth started to slow over a short period of time. Granted, Detroit has come back now, but when you look at it back in the heyday, it really started to deteriorate over time. So like when we look at those types of things, often you can say like, wow, everything's fine, revenue's growing, there's great activity, the effort's increasing, but is the momentum actually shifting? There's complexities but is building, but maybe decisions are slowing or alignment is weakening. And we as business leaders, and in particular in revenue or growth roles, have to be masters at pattern recognition and trying to sort that stuff out. So back to your question, what am I looking at and seeing right now? I'm seeing an emerging set of new patterns that isn't uncommon with everyone else. But the question about, are you starting to shift the way in which you approach that today versus waiting for it to unfold is kind of an interesting thing. A great example is pricing, everything that's happening with pricing. Like the SaaS model is under challenge right now.
Yeah. So I think the people listening to this are going to be like, okay, number one, either they know like something's broken and we need to fix it, or I think we're okay. I'm not sure if we're okay enough. And how do I know? And let's start with that one. So, because here's people looking, they maybe done okay, and now they're being asked for continuous double-digit growth because that's easy to ask for. How do they know if they can make it or not? Like, there's an element of like, I'll try, but if you're saying there's unnoticed patterns that may say like, that's not even in the cards. What should I be looking for in the unnoticed patterns that would help me know if I'm on a path to brokenness and not on a path to growth?
Yeah, it shows up before the numbers show up. Velocity drops, decisions get harder, the output no longer matches the input. I don't know. Like example, a pipeline looks healthy, but deal velocity is slowing down. You're doing more campaigns and more outreach, but the conversions aren't coming through. Forecasts become just a slight bit less reliable, even if the top line grows. So oftentimes those patterns are right in front of us, and it's a bit of us kind of looking the opposite way or not inspecting just one step further, one step deeper, and so forth. The signals show up in how it feels in the business sometimes before the performance shows up. And a feeling is kind of a weird thing because it's hard when you're in a like, did you hit the number or not? No, it feels like it's not going to be there. There's something that we need to kind of rely on in terms of our instincts and kind of like follow those breadcrumbs quicker and faster.
What would you say are some of the ones that doesn't mean they're not, just because they're feelings doesn't mean they don't have numbers attached to them. Maybe they're just more leading indicators that you didn't think were tied to the lagging, like you said, velocity. What are some of the others that I should have on my list as a revenue leader to be feeling and vibing and knowing that that's an indicator?
People in your organization are working as feverishly and passionately on this day as they were before. Competitive changes that are accelerating may impact the market in a way that you didn't think before. New entrants are coming in and they're saying things in a way today that no one else was talking about in the past. They're the 2 and 3 steps ahead of what's going on in the landscape of what your sphere of responsibility and scope are that tend to get me most nervous. I'll give you a great example. In the world of tax and accounting, what I see right now is not what my competitors are doing. It's what the DIYers are doing. What do I mean by that? The DIYers, the people who've got a open claw subscription and are really good at Claude Code, who are trying to hack their way through a particular problem that a piece of software solves today. Oftentimes, what they're doing is just spurring the industry as a whole to move further and faster, but the practical application of what they're doing doesn't have the durability to actually stand up in the enterprise. But studying what you might consider a fringe case of an emerging trend early on to find where the nuggets are of and how it applies to your distribution strategy, your product strategy, your business strategy is an area that sometimes makes me most excited and sometimes makes me most worried.
Yeah, so the DIYer is no longer seen as the cheap sub-optimizer. The DIYer is seen as potentially an innovation incubator. Is that one way to look at it?
I think so. Think about how quickly you can stand up a business today or disrupt a product line or change the trajectory of your own business just because you're good at tinkering and you're good at experimenting and the tech has allowed you to do it.
So this is what I've always loved about you, Ken. Like the insights are fresh. And I would even say sort of progressive. That's the thing I've always admired about you. This is why I've always put you on the stages wherever I am, is because you're pretty progressive in the way you think about the next. And some of those examples were really good. But yet you're a CRO, or you're coaching CROs, and board realities and CEO realities are realities. And they're usually related to numbers, and they look at you as the CRO. So talk to me about that role and really what you see in the hot seat.
Yeah, I would argue that it's the hardest role in the company, and it's not because I have it, but it's because it's at the forefront of the growth agenda. And I would almost call it as the CRO sits at the intersection of orchestrating everything, because growth is the output, but the inputs are spread across the entire system, the entire organization. Revenue is really a lagging output of product or data or adoption or delivery. CRO is where the misalignment shows up first, but it's not where it starts, and the breakdown can happen anywhere in the entire motion. So like strong demand, like your marketing demand's really good, but product or data gaps can slow conversion. Deals close, but the onboarding or the adoption is really slow. So time to value is a drag. If adoption lags, now you've got limited retention and expansion opportunities. And, the CRO is not running just a function, they're orchestrating a system. And I'm not saying that just to put myself in this point of intersection amongst the whole organization, but I honestly, there's a point of thinking about the CRO role that's different than just grinding through numbers, renewals, new deals, pipelines, and stuff like that. And it's really about orchestrating the conditions for an organization to grow in a sustainable, repeatable way where friction points are super, super smoothed out and so forth. So it's a lot to ask.
Well, and arguably it's a newer title in some respects. And some days I'm wondering have we ever evolved from just changing the name to a chief sales officer to chief revenue officer, so that maybe we can just hold you even more accountable, but give you no authority over all those points along the life cycle. So what you say resonates in that revenue is a function of all of those things working together. Yet the CRO doesn't necessarily sit over the top of them. They sit in room as an equal, but I don't hear that it's really in terms of, again, the expectations, it's an equal or should be an equal in the room. If a company's really going to have a CRO, maybe the O is not officer, it's orchestrator. Tell me how you get there. How does a CRO get to that point? It's almost COO-esque. I'm trying to figure out what has to change there in companies who have just sort of glorified the head of sales and called them something else.
Well, I think the first question they all have to ask themselves, and perhaps it's an industry question and one that we as practitioners have to really contemplate, is who owns revenue in an organization? Is that an organizational issue? Is that a CEO issue? Is it the finance person that reports the number? Is it this emerging job called CRO? Or is it some combination of all of them? And without, I think, kind of concrete agreement as to what that is, you will always get variability based on the size of the organization, the stage that they're in, the capabilities of the individuals in it, and the list goes on and on as to where and how that question sits. So I think that's the place that we have to get to. I have an opinion. That opinion is it has to be kind of driven by a CRO. And if that title has to change to something else, I don't know. Someone smarter than me will come up with 3 letters to put that together.
I am seeing in other companies at least sort of a CRO, CCO, and there's a bit of a sharing of a number. Here's the bookings number, CRO. Here's the retention number, CCO. And then there's sort of a mishmash for the expansion, upsell, cross-sell number. But there are at least two. To me, that's a tacit recognition that somebody is owning the onboarding, the implementation, the adoption, the usage, the results. And as a result, then, the retention and the attachment for upsell. Whereas, somebody is currently owning, obviously, new logos and expansion. But even as they're sitting at the same level and at the same table, I still see the tension.
Yeah, because at the end of the day, they're all inputs and outputs to a revenue bridge that goes from we're at point A at the beginning of the period, and we need to get to point B. And there's inputs that come in called new deals. There's outputs that go out, either renewals that don't hold, price increases that don't change. And you have to really look at it in this example and recurring revenue in totality, and be able to actually think about the puts and takes into all of those as an overall system.
Yeah, and I suppose if I'm in that organization and I understand that I'm running products or running marketing or running CS, that I'm really part of those revenue streams and optimizing my part for bookings, for revenue, for retention, for expansion. I'm not saying people don't think that way, but there are a lot of product-centric companies out there that are like, I just got to build the best widget, and y'all better just tell a good story and get your job done.
Yeah, and do you know this better than me because of the what you've been building and advocating for and helping companies with, is like the concept of value realization is what's, I think, becoming more and more important. And to this question about, well, how do you organize a business for optimal growth? The lens around, well, what is the outcome that the client wants to get, has also changed. So more important is organizing your business to maximize value realization for clients. And the way in which people are judging value is changing the way in which they'll consume and buy. It's changing the way in which they'll use. And the technology that's in place has made us ask this question different today than we did before. As we talked about earlier, SaaS and the SaaS model is getting a little bit exhausted. And what people are looking for is a lot more, how quickly can I get to value and return? And I want to pay only for what I used, and show me that it actually had a material impact, because I think the stat is 40%. It's probably higher. 40% of all SaaS licenses go unused. Well, that tells me that the value's not being delivered in the aggregate.
Yeah, and that's before people let go thousands of employees. Then these things were going unused. So not only is that a case, like, oh, if I start doing some capacity management, I don't need as much of you as I thought. And as maybe the workforce starts to shrink for a variety of reasons, I'm not going to need as much of you as I thought, license-wise. Doesn't mean consumption-wise. And so I think let's touch on this. A lot of people are, but let's go there. Because this audience has got a lot of SaaS or SaaS adjacent or SaaS desiring models. And even the services and the hard chunky product companies have all like, how can we be more recurring revenue? And by the time you get there, it feels like it's going to be gone. And those who are there are scrambling. What are you seeing out there for the business model, pricing, and client experience move or trajectory that everybody needs to be aware of and will dramatically impact the CRO and the revenue team?
A couple of things. I saw a phrase the other day. It said, "Consulting is dead. Welcome to consulting." I've also seen the word forward deployed engineer become the new buzz phrase. I've seen Sequoia Capital put out how there's $1 trillion services push that's coming out. I'll just call it tech services or tech enabled services 2.0, which is not dumping people in a time and material basis into an organization to help them use the software. It's actually helping organizations orchestrate the change and the interaction between what work do humans do and what work do machines do. And that all comes from really redefining value, time to value, changing workflows, having good data hygiene, being inside an organization with a leadership mandate to kind of move through using new tech. I saw PwC had something out recently. It said, if you're not embracing AI, you don't have a place here. I'm probably paraphrasing it, but that's essentially what they're saying. So the gap is emerging between buying and the gap is not emerging between buying and installing. It's capability and organizational or operational change to instill that. So we've been talking about in the world of sales forever about being a steward of change and disrupting status quo and stuff like that. That's, I think, all still holds true. The difference now is that it's going to require armies of humans to actually help individuals and humans actually embrace this technology. That is the huge next wave. So if I'm a SaaS leader on this call and I'm listening to it, I'm thinking as much about the value of my software as I am the wrapper of capability deployment on an ongoing basis that I can put into an organization, because that's what all our clients want right now. That's how they're going to measure value. And the businesses who figure that secret sauce out are the ones that are going to have the 20x multiples going forward.
Okay, so everybody, that's the clip you're going to have to take from this and send around your company, because that was the gold. And I'm going to want to unpack that just a little bit further.
Yeah, of course.
What if your next big revenue move didn't come from a blog post or a cold LinkedIn scroll, but from a real conversation with leaders who've been there?
As the world of sales is constantly evolving and constantly changing, I think it's even more critical to get together with people to understand how are they helping to solve some of the problems that our buyers have today.
Meet Emblaze, a community of sharp B2B minds, CROs, CSOs, rising stars, sharing what's actually working in sales, enablement, and customer growth.
We always find a lot of value in the partnerships that we're able to form with some of the other great organizations that are part of the team here. And personally, I love the opportunity to connect with my peer group outside of other organizations and learn from them and try to figure out if there's things that they're doing that we can pull into our organization and benefit from.
Join a monthly forum, dig into science-backed strategy, and get insight you won't find in your feed. Start your Emblaze journey today at emblazegrowth.com.
I've been reading a lot of the same things, and reading is one thing, and then seeing and hearing and feeling. I love back earlier in this episode, we talked a lot about feeling, but yet there's a lot of reality going on there. Somebody, though, wrote that we're basically all going to be back to being managed service companies. People having platforms is going to be less of a thing. What people want are signal. They want analysis of that signal. They want a proofreader or editor who makes sure it's not hallucinating, and then help put that into action, and then do the change management to make sure the impact is. And we are, as a company, as a revenue team, including those who are helping to sell it and those who are helping to deliver it, are really going to all have to live in a depth. I had somebody tell me the other day, like, honestly, we all got to be like solution engineers and solution architects and bring a level of expertise beyond just knowing the features and benefits of a platform, but more the experiences and the activities that lead to outcomes and all the change management that goes with that. So how does the scope have to change in terms of the teams we're deploying, how we develop them, and the roles they might play?
Yeah, I hit on the one that's getting the most attention is this forward deployed engineer. That's the term, but that to me is just one of the roles. Some of it is that the roles themselves might not change. It's just the definition of the work that they do and the measurement of success that they have. I think, in the programs that we've built, I call it our accelerator program. And that's just a fancy word to say that we have a repeatable way in which we help our organizations consume and implement tech. But unlike management consulting or unlike former, let's call it tech-enabled services, where at some point the implementation stops, for some extended period of time, we are really going to need to be a quote unquote wrapper of support for organizations. It's going to start with designing value up front. Like, what is the economic measurable value that this will have? It's going to be, there's a huge element of workflow and system design and redesign. And it's very much around like tangible use cases that are done in a repeatable production ready workflow. The forward deployed engineer is going to spend more and more time in the deployment and the integration, actually tweaking and modifying and changing and helping clients work through system configuration, process change. The thing we talk about, but do we ever really like embed it deep, and is like the human enablement and behavioral change, which is some of it, which we know comes from leadership alignment, leadership narrative, as well as the adoption and use by employees per se, and then I guess the last thing is just measurement, governance, and scale. I don't know how to quantify this, and I don't want to like send up smoke signals, but there's a lot of people using all these open models right now. And are they actually compliant within their industry? I don't know. Maybe we haven't figured that out entirely, but point I'm making on this whole thing is there are a repeatable set of behaviors and actions and things that need to happen in organization. There's roles that exist today in your company as a software provider that probably need to morph. And there are new roles that are coming into organizations to help embed this new amazing technology in that don't just go away on day 91 of a 90-day implementation.
So much there. I always felt like the VC model that told the software companies, don't do services because they don't drive multiples. Just set it and forget it and move on. And then maybe seeded all that to partners and systems integrators or whoever that might look like, consulting organizations. The multiple thing is already broken. And for you to sell more and keep your clients, if it doesn't work, you're dead. And like, you have to care. And finally, I feel like my Midwestern sensibilities are correct on this one. That was unsustainable. And everything you're talking about to me says, you got to live with it. It's easy to make the promise, but how do you fulfill it? And that's going to take roles, skills, activities, systems that are different than many of the companies have. If I built a thing and I put it through my distribution channel, or I built a thing and I put it through an integration partner channel, like that's changing completely, it feels like.
Yeah, 100%. I mean, in a way, we're trying to quote unquote, bend the trend in the way in which we operate. I say that kind of tongue in cheek because I use that term often, and it's a concept.
I've heard it often, and it feels like it's applicable to multiple circumstances. So walk me through, when you talk about bend the trend, where do you apply that? What is it? And then how can a CRO benefit from thinking like it or about it?
Yeah, let me give you the fancy philosophical point, and then I'll actually make it tangible, so it doesn't just sound like I made a bunch of mishmash up here. It's a concept I developed to break what I call the effort loop. And it's sharpening the ability in your organization, back to what we talked about earlier around seeing patterns earlier, and taking that awareness and actually hardening it and making it work for you before it works against you. And I fundamentally believe that there's always this moment, I call it a what else moment, which is a reflective moment to ask your question that comes from a trigger that says, what has to happen before I continue to stall, before I slip, or what can I do to actually surge and go forward? And unfortunately, myself included, sometimes you get stuck in this effort loop of pushing harder instead of like looking quickly at a pattern and just getting trapped in it. And those who see that stuff sooner, those who like actually make really hard, decisive, bold moves and like turn it into the repeatable habits that they inspect of themselves and inspect of their teams, are the ones that actually build like a super sustained momentum. So like, let's take an example of a CRO where your pipeline looks healthy, your velocity, your deal quality might be slipping. And instead of pushing more volume, you literally reset your ICP or you can change the way and time and how in which you inspect for something to happen. Because there's always a reason why something's happening. We just don't perhaps maybe take enough time to actually ask 2 and 3 levels questions around where did that come from. Maybe it's your software, maybe it's the AI model that you have, and the accuracy is improving, but adoption rates aren't flattening. Maybe it's not rechanging the model. Maybe it's going back to the point that we talked about earlier, which is, are there human behavioral changes that actually have to happen to get the workflows to really change? So Bend the Trend is really just a call to action for us to be reflective and think about how do we change the trajectory before it eats us up.
So what are any favorite flags or alerts that you look for so that before you stall, before you slip, or could point you in the direction of a surge? I love a good alliteration, by the way. That was awesome. Just so a takeaway, a practical takeaway as a revenue leader here. Are there a couple that you're like, these are my favorites right now that I'm keeping an eye on?
I think that growth is a pattern. It's not an outcome. It compounds when the system works, and it quietly stalls when it doesn't. So I think most leaders miss that moment because they're so focused on effort, because effort is easy to measure, it's systemic and so forth. But in an AI world, that stuff's getting exposed so much faster because the technology is great, but it doesn't fix the system. It just reveals what's really broken. So, I tend to gravitate towards where the friction points are and look for those, whether they are meetings are slower, people are more tired, what we used to do isn't working the same way. So I know I'm overgeneralizing that because every business is going to have their own set of different patterns, but it's the classic example of, does the system work as with the throughput that it used to? Are the people having to double and triple down on the effort that we had? And is the way in which we talked about things and the way in which we positioned it in the past actually resonating in today in the way that it did? And if some combination of those are off, it tends to signal that something deeper is underneath it. Like, I'll give you an example. Some people, I think this term's been around forever, organizational rot, right? Like I would call it more like organizational mold, and meaning that there's something seeping underneath the surface oftentimes that smells a little bit awkward, but it's not until you wake up and you're like super sick from this infection that's going on that you're really ready to change. First, just doing the right things on a repeatable basis to create hygiene in the organization and being attentive to the idea that nothing lasts forever, and I have to always be hyper vigilant in looking for, inspecting, and asking the right questions, because there's always a pattern there or that's emerging that I either can take advantage of or that might come up to bite me. I don't know if I answered your question, Tim, but
yeah, I mean, you usually try to round out these podcasts with a takeaway and an action item. And so in essence, I'm saying, hey, if there's one takeaway, one mindset shift, one new habit that you want everyone to take away from this, what would that be? That's kind of what I was asking. Is there any piece of wisdom to tag onto that?
Go get good at identifying patterns. Go get good at that. And it might start simply by questioning and over questioning, is what we're doing sustainable, durable, and is something going to come up to bite me? So I'm putting the call out there for greater foresight as leaders into not getting caught in the stagnant stall that happens all too often, because it's oftentimes not decline, it's stall that prevents us from actually getting to the next level.
Yeah, I appreciate that, Ken. As usual, we could go on forever here, but there were so many good nuggets all the way throughout. I hope people who listen to this could take them away. But also, you probably have some other people to talk about with these things because they touch so many other folks in the organization to get this right. But yet here we stand as revenue teams and leaders holding that bag. Let's make sure that we're not just finger pointing, but we're pointing a path forward that we can help lead.
100%, man.
Always a pleasure.
Yeah.
Dude, man, always love the
I guess it's the Jersey thing, I suppose.
Yeah, right. I appreciate that part too. Ken, always great to see you. Thank you so much.
Thank you for joining us for another wonderful episode. Thank you, Ken Powell, and thank you, Tim Riesterer. Please remember to like, subscribe, and follow the Emblazers Show on your favorite podcast app. Meanwhile, check out what membership is all about at corporatevisions.com/community. We'll see you next time.